Okay, all right, welcome again, everybody, or hello again if you didn't leave and come back. I am very pleased to introduce the Claims to Capital, the Junior Exploration Journey panel. So I am just going to give you a quick introduction of who's on the stage before I hand it over to our moderator. So here you will see Denis Laviolette, CEO, Pirate Gold Corp. To his left, we have Max Porterfield, President, CEO, and Director of Visionary Copper and Gold Mines Incorporated. Then to his left, we have Mike Pillar, Project Geologist, First Atlantic Nickel Corporation. To his left, we have Greg Matheson, VP Exploration, Pirate Gold Corp. And then to the furthest, we have Stephen Stairs, President and CEO, Benton Resources, Vinland, Lithium. So with that, I'm going to hand it over to Denis, and I will see you shortly.
Okay, well, perfect. Thank you very, very much. And welcome, everyone, and welcome, fellow panelists. So let's kick it off here. So the idea of this panel today is to talk about how do we get a project in Newfoundland from sort of the prospect into public markets and beyond. Or into, financed and then ultimately, hopefully into like a public market or et cetera. So just kind of going through that different value chain, I think I'll just kind of throw it out to the panel. Everyone here has experience, handling assets at that, ground level as a prospector. So maybe let's start with the prospect stage. What kind of asset would we be looking for as a prospector in the context of potential financing down the road?
Let's go. I think at the end of the day, when you're reviewing an opportunity or project, you have to see what is the big picture and the outcome in the end game. It costs just as much to find a small mine as to find a big mine. And so it's really refining what is the vision, the focus, and the opportunity, crystallizing that. And there's old saying, if you can conceive and believe, then you can achieve. And it's really understanding what are you looking to achieve, and then looking at a property that can meet those obligations and kind of that vision.
Just to kind of add into that, understanding market trends I think is a big thing. Even at the prospector level, if there's 50 gold projects in an area, it might be harder to sell a new thing. But if you're looking at what could be coming down the line, what's going to be the next big fad, is it something to do with EVs or whatever, then maybe you can sort of look around your neighborhood and see if there's an opportunity there to grab ground that is often overlooked and not even staked, because nobody cares about element, whatever. So, there's a lot of opportunities there for small guys to get in a big way by just, being able to look 5 years down the road rather than what's hot now.
So looking forward, when you're looking at, what you think is emerging as the next sort of market trend, and you're looking at maybe perhaps a new commodity type that you're prospecting for, staking for, let's talk about ground packages and land size and how that relates to how attractive a project in its scale can be to capital, because everybody needs to raise money, or you got to get these things financed, or hopefully if you're a prospector, your intention is just to stake the claims and then put a little bit of lipstick on it and see if you can get it placed with the money side that's able to take it forward. What kind of considerations in Newfoundland do we need to think about? Because there is things like, if you do stake claims, there's requirements to spend money on that ground to keep it in good standing. So there's trade-offs here.
Yeah, I'll maybe chime in on that. I think for the average prospector, what you often see is smaller claim packages, right? Because there's the assessment component to that. There's limited capital and even limited time for themselves to be putting into a claim, and sometimes those small packages aren't going to make a project. And I've seen this a few times actually, is syndication of prospectors, right? So prospectors should be friendly with their neighbors, right? Have that ability to share data and share information and try to amalgamate something that becomes a larger project, that you can kind of market out to companies.
Yeah, to add into that, I think that you need to put together a land package that's going to show scale and something past that initial discovery and a future pipeline of discoveries that can come on that land package. I think if you look at the Flin Flon Greenstone Belt, moving away from Newfoundland briefly as a case study on this, you have a camp that's prolific in its opportunities. You've already said a lot of exploration, but it became fragmented. And that fragmentation reduces a lot of exploration work, because when it's fragmented, certainly a guy like myself isn't going to be that enthused to want to go to bring it all together. And so again, it's how does it all fit together, because fragmentation can really hurt. And I think that's an opportunity here, is when you come into areas of Newfoundland, there's an opportunity to get something special, then grow upon that without having a lot of fragmentation, because of it being more of its infancy in the discoveries that are yet to be made here in central Newfoundland.
Yeah, Steve, did you have a comment you want to make on that?
Yeah, actually, for the audience, I think maybe just from the beginning, I mean, like for the Keats discovery, for instance, right? I mean, they've owned that ground 100 times and couldn't keep it in good standing and so forth. And then eventually somebody comes along with a little bit of cash that can advance it, and you get that one lucky hole that, you know, can unlock it and bring in guys like Eric Sprott. So, you know, and from the beginning, you know, you got to search the data, and then you got to, you know, as a prospector, and most of the time you can't afford to take big land packages. And so what you do is, you know, me as a prospector, when I was doing that in the business, you would just take the guts of the anomalies. You know, you may take a dozen of them. And the hopes is you option that to, say, you know, a company like ours now, and they would stake the rest of it, and they, you know, they become, and then the challenge is to get, obviously, on the street. And you need connections for that, and it takes years sometimes to develop those connections and trust, and to get the money to advance them, you know, for our companies, so to speak. And of course, when you have success like Newfound Gold, it becomes a lot easier over time for that investment. And that's another huge challenge in itself, you know, from the start to the beginning or to the end.
Yeah, well, I think that touches on a few good points. Like you have, if you take the fragmentation that Max was talking about, coupled up with, you know, doing the homework, grabbing the ground, but maybe requiring a lot of connections, I think, and it overlaps a lot with, you know, syndication, like Greg was saying. You know, it's important as a prospector, especially if you're fresh in the industry, to make those connections, because your fellow prospectors can help, you can join your ground to help reduce on fragmentation and have a little bit more of a compelling, larger package, but at the same time benefit from the relationships that those other prospectors may have already established. Maybe they've already done a couple of deals and they know how it's done, and they know what terms are reasonable and how things are affected. And so it's a really good idea, I think, that you have a lot of collaboration and teamwork down at that level. Even though everybody's out for their own, they have their own ideas, they want to, you know, stake their projects and things. It's important to be, I think, have an open mind and seek the expertise of others that have been doing it. And, you know, you might sometimes, at least in business, in my experience, sometimes you have to do things one time, learn your way through it, feel your way through it. That's not the winning formula. You know, that one's not going to make you, you know, rich or whatever, but you're going to learn from that experience, and that's the learning one. And then on the next one, you have, you know, your ideas. So I think a lot of this, you got to be iterative too, and try it and be willing to partner with people. And sometimes the ones that you have, it's better to have a small piece of a successful pie than all of nothing. You know?
Well, and it's the commodity trends as well. Like for survival as a prospector, for us, you know, nickel would be hot one year and you could sell all your nickel projects and nobody wanted gold. And then all of a sudden gold is hitting $2,000 and $3,000 an ounce, and you know everybody wants gold. And then lithium all of a sudden takes off, and all your lithium projects are now valuable. So trends are very important for prospectors to be able to sell their claims and timing, again, essential for not only selling them, but also raising money on them,
So what do
it's the way
you,
it
so,
is.
so are you, let's talk about that. So what are some ways to highlight the trends on the financial side so that you can work backwards and say, okay, what's the market actually investing in? What do the investors want? And then what's a good way for a prospector to get that kind of information?
So I think, just as simple as opening up your web browser and watching the news. Go to, finance pages or even your favorite tech site or whatever. If you know, what is popular in the world today. It's not just about, say making gold bars, for jewelry. So what are the sort of global trends that are making money and the companies are producing stuff, because all of those things require commodities in order to build them. So is it rare earth batteries? Is it nickel batteries? Is it whatever? It's, if you can just watch, look and understand that and see how those trends are going, then you can kind of work yourself backwards into, well, what do we need to find in order to keep that that trend going?
Mm-hmm.
And also political power, for instance, Biden versus Trump. I mean, when Biden was in, everybody was building electric cars. They wanted a green earth. Trump, he comes in, I want oil,
Yeah.
right? And you can see it by taking over whatever he can that got a country that got oil in it. So, and then all of a sudden the lithium market collapses because nobody really thinks the lithium markets, they're not going to sell as many electric cars anymore because everybody's going back to combustion engines. So those are all factors into when you push for lithium, or in fact, our little lithium company, we could raise all the money we want 3 years ago, and now we got to wait for that next uptick in the lithium price.
Yeah, I think one of the things that's a great point, Steve. And one of the things that you can look, one of the ways you can look at that as well is when the market dips, right? So when things are hot, things get fragmented, people get crazy. You get these big booms of explosions of prospecting and land grabbing and testing and poking around and information collecting, right? And that's good. Now, some of those things will advance and become successful, but some of them won't. But it doesn't mean that good work wasn't done and good information isn't there. Sometimes these dips, like the Biden-Trump transition, spelled doom for the lithium explosion, right? But sometimes for the prospector or the business builder or entrepreneur, that's the opportunity,
I would argue differently on the Trump and what it's done for the global markets. You could say that it's the oil move, but at the end of the day, everybody's looking at the oil price spike. And if anything, that's underpinned the demand for lithium long term. Because at the end of the day, it's underpinning the uncertainty on price spikes for oil in the future. And so while you had a short-term move on lithium, in my opinion, was driven over the longevity for batteries, right? And so, about 2 years ago, I could go buy electric vehicle, brand new Lexus that rolling off the floor, that they wanted to get rid of it, like 40 or 50% off sticker, because everybody is worried about the longevity of the batteries. So I think that when you make put together a portfolio or an opportunity, you have to say what market I'm going after, what are the supply-demand fundamentals that are driving that market, and you have to also be prepared that when you're ahead of the wave, that you might be early on it, but I'd much rather be early than to be late, because when you get in a situation where you're late, everybody's chasing, and that's the market we're in right now. But when you look at the portfolio that we've built, it was a long-term vision of critical minerals in proximity to Canadian mining infrastructure assets. Now, when you look at where we are today as a society, you could say that that is probably a wise decision to get those assets where they're located. And that was the opportunity here in Newfoundland, is that you've got a great jurisdiction, you've got the workforce, you've got the work ethic as well behind the workforce, you've got the pedigree, and you've got the rule of law that's welcoming for capital to come in. And you're doing that as a region at the perfect time in a big, big cycle. And so it's being ahead of that, seeing what is that cycle, because if you look at the copper space, it's a lot easier, in my opinion, to sell a copper story or a gold story than even a zinc story. right? When, you looked at zinc in 2016 timeframe, I was in Japan, I read an article, it said Glencore's going bankrupt. I was in front of a golden palace. Look at my father, said, there's no way Glencore's going bankrupt. That's the bottom of the zinc cycle. And then within 6 to 12 months, you had 100 plus issuers are all of a sudden, zinc companies. And then again, the dilution of those quality assets that were ahead of that kind of get washed out in that. So sorry for being long-winded. You got to look at the bigger picture on a long-term trend, just like he's doing in nickel, right? Nickel right now isn't favorable, but in the not-too-distant future, your market's going to come back, and those that have weathered that storm are going to succeed in a big way.
Yeah, I think that's that sort of buy. There's another expression they use even in stock buying, right? Rick Rule likes to say it, which is sell on love and buy on hate, and essentially it means the exact thing. Like it's being a market contrarian. If this commodity cycle is a cyclical one, and if you see these dips in these things and people running away from them, sometimes that's the opportunity. You can get the best stuff. That's the time to build. I think about like Newfound Gold for example. There is no way I would have been able to pull off the land grab that we pulled off, and the staking that we pulled off, and with the lack of competition and so on, and all the option agreements. I think we did something like 16 options with prospectors and really hobbled together this thing, but it wasn't a traffic jam. No one else cared. No one else was looking. It was 2015, 2016, the bottom of the market. The street hated gold. It was done. Gold was done. But that was the time to come in and grab what was good ground.
That was the opportunity.
Exactly. And sometimes you kind of got to go a little bit reverse. Like you go, okay, same with nickel. Nickel's out of favor. Well, it's a good time. It's a buyer's market. If you're in the nickel business and you want to get good ground, it's a good time to get stuff.
It's also for a province like Newfoundland that, as we say, as Amanda said, it's got tremendous amount of history.
Yep.
But realistically, we didn't join Confederation until like 1949 and had a modern, mining act that took, well into the 80s before really any big companies came in, except for like a Circle that was mining the Buckins deposit and up in the Bayvert Peninsula. And all these other strange deposits, let's say that's the potential, like what you guys are drilling at Crippleback right now with all this weird alteration and everything. I mean, we know as like guys that's been in the mining sector, when you see rocks like that, it's not normal. Mm-hmm. And all of a sudden, if you guys tap in, say, to a large porphyry deposit, such as something you'd find over in Chile or down in Colorado or wherever, that also creates a new cycle for the industry, and everybody all of a sudden is like, well, there's got to be more. If there's one, there's more. And that also creates new opportunity, and everybody starts looking at all these old commodities and old showings and moly showings and gold showings, in that type of environment. And it creates a new opportunity as well.
Now, Steve, I'm going to throw you this question because I think it's important. A lot of times, at least to the ethos of what this panel discussion is supposed to be about, you've had, with Benton, been prospect generating for the better part of 20, 30 years, right?
Yeah. 2007 we listed Benton, but prior to that, myself and my brother, we did it on a private level.
Yeah, right. And so you've had to negotiate a lot of option deals. You've had to sell a lot of things and try to monetize things. Sometimes you see people get stuck because really they can't find the terms that work for them, or they're reaching a little bit too far. How important is it to you when you have, as a prospector, putting the prospector hat on, how important is it to you to get in tune with realistic pricing and get a deal done, rather than kind of holding out and waiting for that mega deal?
Well, look, the old saying is don't fall in love with your project.
Right.
Myself and my brother learned that quickly. Just make sure, as any prospector acquiring ground, make sure you keep a good royalty, and or if it's an industrial mineral, word the royalty that it's not a net smelter royalty. That's another important thing, because you could really be screwed at the end of the day. But over me, I've done 1,000 deals, maybe more. So I kind of understand it now, but in the beginning, it's a little frightening. But you know, generally you can tell when you're getting a fair deal. And always, if you can, this is for prospectors, if you can make your deal back end, because junior companies, we like light front end deals because we want to test the ground for 3 or 4 years, and all of a sudden, if there's something significant where they're winning and they're raising big money, then it's easier for them to pay the big payments in the back end of it and keep everybody alive. And I always recommend you always take a good equity position in the company, because again, if they win, you win.
And to add to that, if you're in the prospecting business, I think it's important to actually know what you own. And because if you don't know what you own, I think you can be disconnected to the either reality or lack of reality of what it's worth, right? So if you have some ground that's just cursory regional ground that's covering for a buffer, but yet you believe that you have the next big thing on there, it's a big disconnect from what you own and what you think you own and what you really own, right? And you'll never really, I think, monetize what that is if you're not truly understanding of what you've actually staked and begun to work, right? Because how do you become to drive value or receive value for what you have if you can't show value, right? So there's more than just owning the claims, it's showing what are the value of the claims, what work have I done, and you've done an incredible job throughout your career of doing that.
Well, this is why you need to give those soft deals in the beginning, to give the company the chance to test those areas and then say, well, you know, if I'm successful, I'll pay you a little bit later, you know,
Yeah.
based
I
on
wanted to touch on something Stephen mentioned as well, which is the R word, royalties.
royalties.
And I think prospectors need to recognize that, yes, there is a time and place for royalties. But from our standpoint, those are burdens.
Yeah.
Right? And when you're trying to actually, you know, go and finance a project and you walk in there and you got 6-7% royalties on this, you know, that's your top line. And, you know, oftentimes you'll see claims that have seen very limited work, and maybe they've cycled through a couple of junior companies that are tacking on a royalty, and they tack on another royalty, and these become cumulative. And what was probably prospective ground just doesn't become worth it anymore.
Yeah, for me, anything in excess of 2% as an investor is a problem. And I think that's, you know, if there's a 2% royalty outstanding on an asset, is okay. But anything more than that, and it's a burden, and it makes it harder to raise capital.
Yeah.
I think
No question.
the invention of the royalty, with all due respect to the royalty and our keynote speaker, was very detrimental to the industry as a whole longer term, because it reduces a lot of exploration. You know, if you're in Manitoba and you're dealing with something, you could be dealing with a royalty that came from 1940. And where's the person that put together those claim packages from 1940 and their value add to this whole equation, right? I totally understand a royalty. If you stake some ground, you work it, you lay it out, here's the slam dunk, and then you drive it. But as a whole, where this notion everybody needs a royalty, everybody gets a royalty, it becomes this really drag on the economic potential of an asset, and it increases the hurdle for a discovery or a deposit to become economic, right? And what good
But
does that
some
do
of those
anybody?
old royalties are really tough to get rid of. Like, you know, we bought a platinum parcel from Teck, which is now Generation Mining. And of course, the Keevil family, which was the guys that formed Teck Resources, had a royalty on it. And if you think you're going to walk in and try to abolish a 1% royalty that, you know, a billion dollar family owns, you know, you want to, obviously, and you try to negotiate that, but.
Well, in speaking of that, we had a property, Tech had a back-end provision for 20 years. And, you know, I had candid conversations, and the reality goes is, what exploration has happened over 20 years? And what exploration is going to happen over the next 20 years if that back-end provision stays in, and what good does that do anybody? Because it doesn't create jobs, it's not going to create prosperity, and it's just going to continue to encumber that asset. And then when you kind of stick to the guns and rationality comes on, you know, I think people side with reason and say, hey, you know, what are we holding on to? And why don't we let it free so someone can actually create something out of it?
I think one of the things I noticed with royalties, so one, I think the 2% is a number everybody should know about. 1% is realistic. If you're a prospector, throw a 1% on there, leave a little bit of meat on the bone for somebody else. That's for the company itself to, if it needs that tool later. That's a sweet spot. You'll see people and companies push for that. It's because it's real. They want to take, they're okay with the 1% because there's still another 1% to play with if they have to do a deal with Franco or Silver Wheaton or somebody else downstream, or like you saw with Marathon, they had to do it, and they did that deal. Now, you know, that 2% number is important. The other thing that I've seen, and I don't know who invented this, but is these friggin' pre-NSR payments. So the you know, like, so now guys are putting royalties on, and prospectors are being advised, I don't know, by the whoever, but there's this whole, like, kind of a viral trend where you got the prospectors looking to flip in their claims, and they want a pre-NSR payment after, you know, year 4 or year 2, and it's, you know, 20 grand a year, and they paid 20 grand to stake the damn thing.
Yeah, advanced royalties. So
Advanced royalty payments. And I don't know where this came from, but it's, I certainly wouldn't touch it. I don't know about you guys.
One of the things that I found, you know, funny from all my dealings, I bought, originally I bought the Cape Ray deposit, which is now Omega, which I sold to those guys in, I think, 2015 or 2016 after we spent about $1 million on it. But I bought that from an old geologist prospector, a brilliant guy, Charlie Darren. He's passed since then. I love deal with him, and he had great old stories. But so he sat with me, and he had, you know, he was the best negotiator I've ever negotiated with. He'd always do a fair deal, beginning again, easy in the beginning and hard in the end, which I made it all the way. But he wanted 2% royalty on the deposit, and I said, yeah, no problem. But he said, I want a sliding scale royalty. So I want to take it all the way to 5% if gold hits $3,000 an ounce. And gold's at that time trading at like $540. And I'm like, okay, so if it goes to 1,000, you get a 3%. If it goes to 1,500, you get 3.5. And so he had this thing ratcheted in there, and I'm like looking at this thing saying, I want this thing, so I'm going to do it. I said, gold's never going to $3,000 an ounce. So now, here we are. I mean, it's like.
And is that royalty still there?
Yeah, well, when I sold it to them, they had the agreement. I'm assuming they know it. I hope you do.
Yeah.
But yeah, so that was a really interesting strategy that he had, and sure enough, now it's 5% royalty. You know,
Well, I can touch on maybe a really kind of famous example from my neck of the woods. There's a producing gold mine up there called the Holt McDermott mine. This was started in the 90s. I'd say it was in the late 90s that Barrick actually owned the asset. And a small little company called Franco-Nevada jumped in there. This was their very first royalty that they took. And they put a 1% or 2% NSR onto this to help finance the construction of the mine. But it was a sliding scale royalty. They went up 1% for every $100 increase in gold, up to 10%. And by about 2012, or whenever, I can't recall when we hit $1,000 gold, there was 10% royalty on this asset. And it's changed hands a few times and ended up in Kirkland Lake Gold. Eventually now it's in Agnico, and Agnico was big enough that they were able to say, you know what, if you're not going to negotiate this down, we're just going to shut down the entire mine. And that asset shut down in 2019, 2020, and those two giant companies are just staring at each other, seeing who's going to chicken out first to get this asset back into production. So the sliding
Many
scale
people listening
royalty
might
is-
think it's a good idea to put a sliding scale royalty onto their things
Yeah,
after this.
Well, from our standpoint, it's something that we just can't stomach, right? I
Right,
mean,
absolutely. That's what
you can't take that.
it was a bad decision on my part, but I got the deal done, and I sold the project eventually for $7 million.
Well, and I
so
think you got to
done
put
okay.
I think you should put a context on the exploration business as a whole, because the average success story happens on the 7th company that's taken over a piece of ground and worked it off the work that's been done by everyone else. And then to further that notion, if you look at the statistical odds of a target being generated that you're going to drill becoming an economic mine, it's roughly in 1 in 4,000. And so when you're adding another onus on top of the other statistically high hurdles, you've got to go at what point is the model, not going to be able to sustain this. And also, when you talk about royalties, it's what is the royalty relative to the deposit style? And how much can that deposit style or the grade of the deposit be able to stomach? So, when I get shown a 6% royalty with a $50,000 advance minimum royalty payment on some ground that, I don't see a lot of opportunity with, I would argue that, how far is greed going to go before reason breaks in? But you got to go back to where are we at? What are the odds of the business? And then what do we have to do on the exploration side and funding to make that vision become a reality in the face of those odds and the risks associated with that, right? And it's what's equitable for capturing that ground, maybe doing some of that work to work that up in the broader scheme of all the other risks that everybody has to bring in, whether it be from the geologists, geophysicists, engineering at that stage, permitting, environmental work, to all get to that in royalty achievement, right? And what is the role early on of putting that ground together and the value of that proposition, given how long it can take, the risks associated that other people have to take to make that all a reality.
Mm-hmm. Yeah, I think the risks are all there. So anyway, listen, we're into the treasure hunting business. This is risk reward business, and the risks are many. Like you said, you got the geological risk, the capital risk. You've got all these sorts of things. You're not cash flowing. These companies don't make money. They don't produce any revenue, and so all they do is spend money. And basically, it's no different than, being the captain of a ship looking for a sunken Spanish galleon with a hoard of golden coins in its belly, and you've got all the clues and the hopes and the dreams and the ideas of where you've got it, and I've read these old maps and I figured out that it's here, and then you got to get a ship, and you got to get a crane, and you got to go to maybe a little submarine or something, go underwater and look at, like, it's just big money. And so the explorer, the treasure hunter, doesn't have all that. He's got to go raise it. And then it comes time to go and actually test it. The risk is in deploying that boat, deploying that little submarine to go down and look. And there's a good chance, probably a better than not chance, you won't find it. But the whole thing is, so that's where we're at with the exploration industry. That's what the exploration industry is to mining. We're treasure hunters. Sometimes we've got assets that have some meat on the bones, like, that have, ounces in the ground or pounds or tons or whatever it may be that have been established. And there's some economic viability to that. But even in those companies, unless they're actually mining, they're nothing but a pure exploration company, a treasure hunt. And, it's unreasonable to expect these companies to put that risk, and these investors that are behind these companies, to put the risk forward to go and to search this ground and de-risk it and discover something. And, putting in, upfront cash, what is it, early NSR payments and things like that. It's just unbelievable.
On the whole thing is that as equity investors, anybody buying in these exploration companies, you're subject to dilution, right? And so I just look at it from a fundamental standpoint that if you stake some ground, you vend some of that ground in, but then you're never subject to that same dilution. And carrying that same risk, the other people, the investors, the management teams are all subject to that. I'm a big investor into
Fire gold.
I'm a visionary and all that. But into you got to believe in yourself too. And so you kind of go, where's the alignment on that risk taking on the treasure hunt for just Xing on a piece of parcel, particularly at a time when it's very, very easy to do so with a click of a button and a very low threshold or barrier of entry. And this online staking has reduced the barrier of entry.
That's another interesting point, because I don't know when the law came in for map staking, but that prior to map staking, you had to physically go out. So the prospector groups that actually would do that would shrunk up dramatically. Now anybody can stake a claim by just getting a prospector license, go online and own it. And that's a whole, that created a whole different beast of exploration as well, right across Canada. And that's a story in it, in itself. And when you move into the broker side of things, like when you're trying to raise money, you've got guys that are long, like Eric Sprott and those guys. Generally, they'll invest and they'll wait years to collect their money and hope they have success. But then I've sat with brokers and said, well, are you going to be like, if I invest 25 cents now, or are you going to be $1 in, 6 months? And I'm like, well, I can't tell you that. And, because, one of his old saying, I remember Bob Rose, I don't know if you remember Bob, but he's like, well, I don't even buy green bananas anymore. You don't want to wait that line for them to ripe. So it's a tough business, from that aspect as well.
It's definitely something we got to face because that's a really good point, Steve, and it's a world we live in today, with the internet, YouTube, TikToks, Instagrams, all that stuff. Everybody's attention span's about yay big. And, when it comes to investing, the time horizon of what is a long investment, that's something that I often talk to Eric, or I've talked to Pierre Lassonde and other people, and picked a lot of these brilliant people's, brains. And that's the common theme with these big investors is they invest with high conviction, but they're long. And what long means to them might be a decade or 5 years for the thesis to play out. 10 years. When I started with, my age cohort's brain and attention span, for me, like maybe 3 years was a long time. But in talking with all these guys, it's like, that's not that long. And 3 years now, working in it, 3 years flies by like you wouldn't believe. It's unbelievable.
And what you guys are doing with Pirate Gold, by the way, is like the actual create a show and show the steps from the beginning, to hopefully the end of discovery is brilliant. And that's something that the whole industry is kind of missing. I mean, we do little skits kind of like that, or interviews, and try to put that point across in one thing. But the actual, show people where you're bringing in the core and the drilling and you're, showing mineralization and stuff. That's super important. I'm going to try to do that myself. But again, that's an investment, not, it costs money. So do you put money into doing that, or do you drill a hole? So for a company, that's a decision you got to make, unless you got like $28 million in the bank.
Well, for the purpose of this panel, actually, that's an interesting point, and thank you, Steve. But I think it kind of sparks an interesting question. So, oftentimes I would see prospectors at PDAC, or prospectors at the at the show, with their prospects on display, looking to find investors to take a bite of their project, or to do a joint venture, an option deal. Maybe we should rethink that. Maybe that plane ticket to Toronto to go to PDAC to set up a booth in the claims alley there may not be the best investment. Maybe the best investment is in a little bit of footage, and
I've actually seen that recently. Yeah, some prospectors are now, everybody's got a phone in their pocket. We don't always have time to make field visits. Take me on a tour of your project just with your phone. It doesn't have to be high quality footage, but it really gives you a better sense without having to walk 3 hours into the woods. And
Well, even with the price of a plane ticket, you can buy a nice drone, fly over your property, take videos. I mean, there's one point I wanted to make that this kind of involves everything we've talked to about now is just whether it's a prospector or a junior explorer is the ability to tell a story. It's on, like Max said, it's on understanding what you have. But if I believe, like I believe in our project, I love our story. But how do you convince the guys to open up their checkbooks to come in? We need to have a story. We need to talk about supply chains and sulfur-free nickel and stuff like that. But you have to package it together in a story that people understand and that makes sense to them. And then you got to get that out. So if you use a combination of videos and footage and mix in some market stuff and that to tell your story, you've got to make people believe, and it's like, I had some horrible sales job coming out of high school. And I remember my boss telling me at the time, he said, if you don't believe in our product, you're never going to be able to sell it, right? And so that's, that same sort of mentality, comes with these projects, whether you're the prospector, whether you're a junior, or even, up into more advanced companies. You have to understand what you have, you have to believe in what you have, and you have to have the ability to get that message to the people that you're trying to attract.
And that makes it
So
harder when
true,
you're
Mike.
first as well, because you guys, like, nobody's got a wire rate deposit in production yet, right? So that makes it even more difficult to convince them to be a first.
Oh yeah, and I mean, we've heard that in conversations where it's you tell the story, they like the story. Oh, this is really interesting. Nickel's kind of on an upswing. Everything is looking good, and then they say, so how many mines like this are there in the world? And you're like, well, 0. There's one other advanced exploration project, and all of a sudden, they'll tell you straight up, well, there's no legitimacy to this, and it's like, well, here's our story, and then well, we love your story, but once somebody breaks ground, come back and talk to us, and it's like, well, how do you get to a point where you can break ground if you don't give us money? So.
I think you hit it. I think you hit the bullseye, though. I think you hit the bullseye with just the world of things. It's. Some people do this business in sort of a war of attrition. They've got these different concepts and ideas. Some things work, some things don't work. And I think there's a clear through line, as you said, through with success and conviction. Like, if you believe in what you've got, that's going to work out. I 100% believe that, because especially, in the whether you're promoting a junior company and you're out there raising money, like you said. If you really believe in it, those are the ones that always work the best. And if you're in a prospector and you've got a handful of different concepts, the ones that really, really, you can really, really get behind and you're really, really passionate about, you'll always find a way to, the other ones might expire, but that one you're going to find a way to get it placed. And I think it's important to have narrative and to believe, in
And timing and price.
timing price.
I went to the Chinese restaurant here in Gander, I go to Chinese restaurants because I love fortune cookies. And so the fortune cookie, when I got here, was if you believe in yourself, so will others. And that really harps to the point that you're saying. And then my father was a salesman. And there's a model called the KISS model. It's keep it simple, stupid. And you have to realize that I'm not a geoscientist, but one day I'll get an honorary geoscientist degree. But as a geoscientist, you're really subject matter experts in a very complex thing that the average person simply doesn't understand. And you've got to communicate to them in a way that's so simple that a lay person that's not a subject matter expert can understand what you're trying to articulate, where you're going, and what the end result is. Because you'll get in front of a generalist investor, and he might be looking at a mining play today, or even that hour, and then his next meeting could be a tech deal, or a psilocybin company. And so they're not all experts in your subject matter field, as long as you can articulate what the big picture is, and pictures are a great way to do that, and then also showing comparable. So in our instance, it's always easier when you can show what something's grown into that started the same way, like Firefly in our instance, right? Mm-hmm. So when you can compare and others can see, look what that is, look at where they are, and how they can become that. And that becomes very clear, particularly for people that aren't already really well versed in what they're looking at.
Yeah,
we're getting a lot of new entrants that are going to be coming in the resource space as investors, and we're all competing against for capital at the end of the day. It's how do you articulate your story to that new wave of resource investors that's coming in, because that's new money, that's new blood, and that's what's going to be driving exploration dollars in the ground. It's going to be driving equity valuations higher, and that's what is going to make everybody in this room money. Yeah,
well, it's interesting. Like, if you think about, just to put it in even our perspective with our companies, newfound gold, that's a good point, Max, and faced with that same problem of just demystifying and simplifying things. With newfound gold originally, and I'm not sure some of the people in the audience may have been aware and following the story, but we were very excited about our discovery. We understood our science, and we know the comparative to this geological district with Victoria, Australia, and the Bendigo region, et cetera. And you know, there was all these analogs to Fosterville, but at the time it was just so much easier. As cheap of a trick as it wasn't a trick. I mean, there's everything we said about the analog is true, but it was much easier to promote the analog it was kind of gross doing it, you know? We were sick of talking about how this thing looks like Fosterville because we're excited that it's its own thing, and it's, you know, we got, you know, our mitts around this, you know, this thing over here, but it's easier just because that's what's going to communicate it easily to people. There's the generalist doesn't
Comparable.
understand the comparable thing.
Firefly's at 50 cents, and now, you know, they're $2, and they've grown this resource from here. I'm not talking about like from the beginning to now. And if you can, like Max said, show their deposit against yours, this is where they started, this is where we are, look, we're very similar. And this is
Yeah, like you
potential.
can, it's like as simple as two sentences. They're at 60 million tons, they're over $1 billion market cap. We're at 20 million tons open, we're at $20 million market cap. When we connect the gap, that's the valuation lift that you'll look to achieve. And it can be that simple, and if you can articulate that and distill it to those couple sentences, you know, I'm also have my own coach too. Everybody has coaches throughout their career, and it's really about assertions. And it's making a series of assertions when you're giving your presentation, and you don't need to worry if they're questioning what that assertion is. And it's just like a politician. I started seeing it when I started seeing it. As a politician, I'll just make an assertion. And even if you're sitting there listening to that assertion going, that is the craziest thing I've ever heard, or that's total bullshit, they'll just keep rattling that assertion. And, you know, whatever that assertion, and you're driving that message, and you're going to not capture everybody, but you're going to capture those that you need to capture in enough to make sense. And it's really about what is that assertion, what's the messaging in, and how does it stick with and resonate with them for that hand-to-wallet reaction.
Yeah, I mean, we have a portfolio of about, I want to say, playing with about 85 million right now, deployed in this space, just investing. And this is with Earth Labs. And one of the things that, you know, we've been investing a long time. And one of the things that, for me, when I see conviction, when I see a genuine person that's not trying to actively sell me, that's actually, I'm happy if they can sell me, and I can see that, and that they have that ability, that's always good. But when I really just see that they believe in their project, and they're really passionate about it, or, you know, it's a CEO or whatever, they're really excited about what they're doing, or a geologist, and, you know, they're totally committed. Those are the ones you want to cut a check for, and at least that's for me. So, you know, with that same philosophy, I think I've always had a lot of good luck playing. Just be yourself and believe in what you're doing, believe in what you're saying, and the investors will see that. The investors will support you.
And just sort of touching on the point about keeping things simple. You know, when I was in university and I was starting to do presentations and that, my thesis supervisor, Derek Wilton, would say to me, like, when you're setting it up, you know, explain it like you're talking to your mother. If you can explain it in a way that your mom understands, then everybody else will understand. Just because you have the ability to use big science words and technical jargon, you know, it's not necessarily going to help it. Just keep it simple, get your message out. And the same sort of strategy comes into play here, especially when you're going to investors. Because, I mean, you're not the only company that's going to that investor looking for money. They're getting pitches all the time. And so you need to have something that's quick and simple and effective, you know, being able to boil your project down to a couple of key points so that you can get that, hey, look at us. This is, you know, look, point 1, point 2, point 3, you know, so that you can catch their attention. Because otherwise, you know, anything extra is just going to be noise, and you'll basically dilute your own message, and you'll lose out.
I know one of the pieces for this talk was to kind of talk to prospectors about how to get, you know, their projects there. We just talked about sort of how to finance companies, but how does a prospector pick a company to deal with? Because they're not all good. You know, sometimes there's some booby traps out there. There's actually more of them. There's more booby traps than good ones, right? So how do you sort the wheat from the chaff here? Like with the junior companies that are coming in Newfoundland, shopping around, looking for their project. You can easily lose your money, or, you know, you staked your claims, and you could have done a deal over here, a smaller deal with a good one, and it works out, or a bigger deal with a group that's kind of a couple of hucksters from Howe Street in Vancouver, and it's going to zero for sure. So like,
Well, I think that's
There's
where
still the royalty.
well, I'd say this is where conferences like this or the CIM in St. John's are incredibly important for prospectors to show up, because you're going to be around other prospectors. The conversations, if a company's reputation is good or bad, that's going to circle. So there's nothing wrong with reaching out to to your colleagues and saying get the scoop on people. You don't necessarily have to, divulge information. Hey, I'm talking to these guys, but just as a, you can kind of bring it up as
Yeah,
general
what do you think of these
conversation and
guys?
say, hey, see these companies around or these investor guys. Is there, especially if you're new, if you haven't learned by personal experience, just simple conversations are a good way to sort of get reputations.
and
Understood.
I think that's good. That's good advice. I think if you don't know, ask somebody that might know. But what's a way that maybe they can figure it out for themselves?
Well, I think from the prospector's perspective, if they're being approached by somebody they don't know and if they're unfamiliar with, there's definitely a sniff test there, right? Probably if it sounds too good to be true, they're making here's 20 million shares and you're going to be rich by Tuesday. That's probably a red flag to say, this is not a group I want to be involved with. And then, look at their past experience. If they're changing jurisdictions every other year, changing commodities every other year, they probably don't have conviction on any of that.
Yeah, I'd go even
Usually
a
you can
step
find that
further.
in-
You can look up
when you
the
search 'em pretty quick,
Yeah,
look up the
there's-
management team and their history. You can, Dr. Google it. Look up the management team. What have they done? What have they, how much money have they raised recently for their projects? Their board. Oftentimes, you can look at all the directorships and see, it's half an hour of research, but not much. And, usually their bios, people tend to brag about the best things they've ever done. And so you can kind of look real quick and say, okay, these things worked or didn't work. I think that's a good way to tell if this company's going to be decent one to work with, or maybe you want to go a little heavier with the deal with those ones versus other ones that,
Well, you've seen it with Newfound Gold. I mean, when they acquired, or when you had your discovery and the stake in rush in Newfoundland happened, I mean, every junior company from around the world was here, and they done all kinds of massive deals and raised millions of dollars, and I mean, 50% of them never stepped foot here. I mean, they just took that money and
bingo.
they basically spent the money on going to conventions and, big resorts and.
Yeah, they kissed the cot on George Street and then they left.
Yeah,
And
and
that's
said,
it, yeah.
said they were on the island and explored, but, so it is tough, because you also gotta look at the prospector's perspective, is, they're trying to move ground and make a living or make some money out of this. And, projects are sometimes hard to sell, so you take what deal you can get. So it's, sometimes that's difficult as well.
Yep. Okay, well, I think we're winding down. Got 2 minutes left on the clock in front of me here, gentlemen. I think we might as well just go to the next part, which is what questions, or is there a break, or what are we doing?
Hello, I'm here.
You touch on everything.
I feel a little bit like Oprah. You get speaker good. You get speaker good. So I just want to say thank you so
Well,
much.
thank you
This
very
is actually
much.
the last technical presentation or panel. It's been an awesome couple of days here. So thank you so much to all of you folks for being here, for everyone else who presented. And I had to give a shout out to the technical committee. So Alex, I don't know where you are. My absolutely amazing and beautiful co-chair. I don't know what I would have done without you. Also Carolina Valverde Cardenas, Leah Wells, Brad Eisen, Peter Dimmel, Norm Mercer. Thank you so much, man, if you are in the audience. It's really possible without you. Huge congrats to the chamber for putting off another amazing show this year. Oh, wait, was I doing all that without microphones? We can hear you. Oh, that's my mom voice. So after this, we're just going to head out for a short breakout session in the gallery that's adjacent to the auditorium. But again, I want to say thank you so much, and thank you to the audience for being here. This is really a fantastic showing, so thank you all.
Thank you.